Now this problem deals with the effect of accounts on the balance sheet. I told you in the lecture that we were going to deal with these kinds of things when we got to these problems. And this problem deals with that. It reads this way. It says a firm has $800,000 in paid-in capital, retained earnings of $40,000, which includes the current year's earnings, and 25,000 shares of common stock outstanding. In the current year, it has $29,000 of earnings available for the common stockholders. A part, what is the most the firm can pay in cash dividends to each common stockholder? Assume that legal capital includes all paid-in capital. The B part reads, what effect would a cash dividend of 80 cents per share have on the firm's balance sheet entries? And C part, if the firm cannot raise any new funds from external sources, what do you consider the key constraint with respect to the magnitude of the firm's dividend payments and why? Now, again, this deals with some of the accounting issues that we're talking about. When you talk about legal capital now, you're talking about retained earnings. And the most money that a company can pay out in dividends is the amount it has in retained earnings. Now, that's the legal definition now. So they have $40,000 in retained earnings. There are 25,000 shares outstanding. That means they could pay out $1.60 per share. That's the most that they could pay out. They also ask us about the balance sheet entries. So if they have 25,000 shares, and in the problem they told us that they're going to pay 80 cents a share, that means they're going to pay out $20,000 in cash dividends. What impact does that have on the balance sheet items? Well, both cash and retained earnings will go down by $20,000. When you pay cash out, it has to come out of cash, okay? The offsetting entry is retained earnings. It also will go down, the balance sheet balances. The C part now, what's one of the practical considerations in paying dividends? Well, cash is key. The biggest check that a company can write for any purpose now, the biggest check that they can write is what's in cash and marketable securities. They can't write a check bigger than that. So in a practical sense now, what's the largest amount that they could pay in cash dividends? Well, it's what they have in cash and marketable securities. Unless they go out and borrow the money, they borrow money and put it in the cash account, only then could they pay out more money than they have in cash and marketable securities. So when you talk about really the practical sense, what's the largest kind of dividend they could pay out, cash is key. And by cash now they mean cash plus marketable securities. Anything paid out beyond that, you'd have to go borrow that money to pay it out.